All banks now have digital components, so what makes a truly digital bank different? Will digital banking mean an end to traditional bricks and mortar branches on our high streets? And just how do you build a bank? To answer all of these questions, we're joined by CEO and co-founder of 5 Degrees, Martijn Hohmann, who's leading the charge in transforming banks for the modern world. I'm Angela Korp. Welcome to the Business Debate. Martijn, thank you for joining us at the London Stock Exchange studios today.
Thank you, great to be here.
So let's start with what you actually do. How do you build a digital bank?
Well, first of all, I think it's really important that we define what a digital bank is. It's just having a website or just having an app. Does that mean that the bank is truly digital? I think a bank can only be truly digital if the front to the back, if all operations are digitalized as well. Otherwise, you will just be having kind of a lipstick on a pig.
So how do you actually go about then building those banks? Because this sounds like the stuff of science fiction.
It is, in a way, because banks are really, really complex. There's so many processes that need to be automated, so many activities that need to be performed to be secure, to be client-centric, to make sure that the client can access the bank via any channel. So you really start at at the core of the bank, all the processes, and that's basically what we do.
So could any bank become a digital bank, or are some banks too big, the bigger high street brands that we know of?
Well, the thing is, they all should become a digital bank, otherwise they will get extorted. The thing is that the bigger the bank is, the more complex it is to migrate from being the old legacy bank that they are today to modern digital banks that have all processes automated, that the client can access every day via any channel.
But that's exactly what you do, take an old-fashioned bank and turn it into a new one, and you've had some really good success lately with one of those particular banks.
Well, we do a number of things. First of all, the mid-size banks, they are still quite comprehensive, and what we can do best is actually use their old product systems, and we put actually a new bank on top of that, and we can open the doors of that bank the next day.
The next day, so you don't run the two systems in parallel?
Exactly. So there's no risk for the bank at all, because we keep the financial integrity intact. But all processes, all channels, they are renewed, and the old bank is still there, so there's always a rollback scenario possible, and clients will migrate themselves easily to the new bank.
But you haven't needed to use the rollbacks?
We have never have to use the rollbacks.
So why aren't more banks going digital if it's as simple as you're making it sound?
Because they are afraid. I think all bankers are traditionally a little bit risk averse, and this is new technology, this is new trends. There are many players like ourselves coming up to the market with the most modern technology. This trend is happening now, and we have just done 10, 13 banks today, but we see a lot of traction and an influx coming up now because bankers feel comfortable that it can be done. They have examples of their predecessors.
And do you see a time where there are no more physical banks on high streets?
Well, I wouldn't say that a digital bank automatically means that there are no physical presences anymore, because then even the physical presence, a shop, a bank shop, internally they are digital. But you could imagine talking to staff still. However, they have the best systems behind them that they can offer the best services to their clients. It's always a choice of the bank whether or not you want to offer these services. However, everything comes at a cost. So there might be other banks that only go digital, and we see a lot of examples of that already in the market today.
And what about the human cost? Because basically any time there's a digitization, that results in job losses.
Exactly, and I'm afraid that will happen. We have one bank where the operational cost went down after the implementation of our system with 60%. And the funny part is that that's good for the bank, that they have less costs, which in the end also will result in better prices for the consumers. But also think about that 60% are also cost on the consumer side, because it's 60% of effort of the consumer trying to reach the bank and talking to them, which they don't have to do today. So the knife cuts in both ways.
You're at the cutting edge of what we call fintech. It's a buzzword we hear anytime we're talking about technology and finance. What do you think is the most exciting future prospect that fintech can bring?
Well, fintech is a really wide-used term. I would like to divide the fintech scene in basically 2 different categories. The ones that actually attack the banks, and the ones that enable the banks to step into the next era of digitalization. Obviously, we are one of the second group. I think the fintechs that actually attack the banks, we have some successful examples, but at the end of the day, all the big banks, they still have all the clients. It's quite a hardship to move over to a simple alternative and have many different providers of many different products. So I think the future is where we try to modernize all the banks, and then some banks will not. I'm not sure what their prospect is. And some will, and I think the banks, the labels will be the same in the future. However, how they operate, what they serve, that will change dramatically. You will not recognize your same bank in 10 years anymore.
Martijn, thank you very much for joining us today.
Thank you.
And join us next time on the Business Debate when we'll be discussing sustainability and artificial intelligence. Until then, goodbye.